Okay, we actually have a really strong group today, Julia. So this should be really, really good stuff. Folks, thanks for joining us today for our weekly Ask the Expert webinar with Julia here. She is going to be discussing relevant topics at this point in time during the year when it comes to federal tax filings, also accounting. So whatever questions that you have, please make sure that you put them in the chat box so we can make sure that we can address those after Julia's gone through the content. She's going to go through some basics with you to help you get started and move you along in the tax season. Again, Julia is our weekly webinar host for Ask the Expert. An expert she is in bookkeeping and accounting support, including CFO services for the large and small business. When it comes to designers, she also specializes in unique and complex accounting needs for interior design firms and showrooms. And when I say she has untangled some knotted shoelaces worth of trouble in accounting, that is exactly what she has done. She is a whiz bang at accounting. Also, she offers comprehensive, I don't know why I almost messed that one up. I should have had enough caffeine to speak clearly today. She also offers a comprehensive procurement service for designers and showrooms as well that you can definitely talk to her more about, and she can get you the help that she needs. Again, one last reminder, in order to get those questions into the chat box so we can answer them for you, please click on the Q&A button in your Zoom toolbar, as well as the QA window pops up. Make sure that's where you enter your questions, and Julia will get to those during the webinar. And with that being said, Julia, I'm going to as usual, hand you the keys to the kingdom. It is yours. Wow us with
Hi.
your knowledge.
I don't know about that, but okay. Hold on, let me share my screen. Just confirm you can see my correct screen as I'm always
Studio
got
designers up and running.
Studio Designers up and running. So good morning, good afternoon, everyone, depending on time zone and where you're located. So today, with the tax deadline coming up and approaching in the next few weeks, we're going to discuss some key elements in terms of tax prep and what you should be reviewing and why. And we're actually going to kick it off right away with reports. So as everyone knows, 2023 has come to a close. The 3/15 tax deadline is soon approaching. I don't know how many weeks away, but very, very soon. And then the 4/15 is approaching right after that. So anyone who's an S Corp or a partnership will be due on 3/15. If you're asking for an extension, the 6-month extension is also due on 3/15. The extension, though, does not alleviate you from making your timely estimated tax payment. So whatever you think your liability will be, that should be made on time. And then the 4/15 6-month extension is 10/15. So that'll give you a little bit of cushion as well. So to start off, let's go to reports. Let's go to legacy, which is where I typically go, and let's concentrate on our balance sheet and income statement. So just as a reminder, this is a test database. So a lot of the time, the balance sheet actually looks extra fun. And so this is a great example of what a balance sheet should not look like. And then we'll dissect the income statement a bit as well. So remember, Studio Designer is on an accrual basis only. So anything that's populating on your income statement is there because you invoiced it. So again, also remember, time billing should always be invoiced. That's the only way to get time billing activities on an invoice for somebody to pay would be to invoice these activities here. It automatically recognizes it as revenue. Studio Designer knows to do that. And any of your products, once they've completed the entire item journey, those should be invoiced also. So let's pull our January to December income statement. This is one of the main reports your tax preparer will need. I don't like to see zeros on mine. I really want the system to default to that. So I'm going to click PDF and I'm going to see what's going on in here. So if you
I feel like
notice,
that was a suggestion directed at me, Julia.
well, trust me, I've made that, I've not been quiet about that suggestion.
We'll see what we could do.
It's really silly though. I actually think it should be a company preference, right? Some people probably like to see it, some people don't. I'm all about efficiency. So every single time I'm in a report, I don't like the fact that I need to toggle this to a no or a yes, right?
Hmm,
I think it'd be great as a preset.
that makes sense. I'll see what I can do. I'll run that at the chain for us.
Okay, so again, I took all my zeros out. I just want to see any accounts with activity. And so as we could see, this is showing $750,000 worth of income sales. So if you notice, the system automatically splits a couple of things, right? So we have income sales, which is related to items and product. That's this number. We have income time billing, and then we have our miscellaneous, which is typically reimbursables. If you do any type of commission or royalties, anything like that, that would typically go down here in this section. So we did a decent amount of product revenue. We're one person. It's just me. I sell quite a bit of product up here. My time billing, I would actually say for one person's a little bit on the low side, but decent. And then here's some reimbursable expenses, and here's my income. And then cost of sales. So this margin is on this number. That actually looks really, really good, really, really healthy. And then here are my expenses down below. So before I send this report and before we pull the balance sheet, please remember that everything should be reconciled in your database. So to do that, your accounting, and you go to reconciliation. Again, please remember this is a test database. So reconciling does not happen because there's no true reconciliation unless we're doing it as a demonstration. And so then it is just going through the steps, but it doesn't tie to anything. So all of your accounts for cash and liabilities are here, and all of those should be reconciled through at least the last day of the month. So think about expenses on a credit card that, especially if you have a credit card that spans mid-month, that's 1/12/15 to 1/15. The 1/15 reconciliation still needs to be completed so that this part of the expense section is correct for all of 2023. So this is your very, very basic income statement, which is the same as at a profit and loss. So those of you coming from QuickBooks, that would be the same verbiage. Again, just remember accrual based only. So this is only showing you things that have been invoiced on the top half, and only showing you cost of sales on product that's been invoiced as well. So the income statement is usually a lot more straightforward to read than a balance sheet. And so then let's go to our balance sheet. Let's go to no. And let's go to 2023. And let's see what we have going on. So the very first thing I like to look at is I like to double check to make sure that my net profit and loss here, this number, actually ties to this report. So this report, the income statement, does talk to the balance sheet. So this number, this net positive number down here that we have, which is really healthy this year, 453,568.31. That's a really great question. So let's, is there a way to reconcile the account? Does it have to be manual through the general ledger? So you'd actually reconcile through the reconciliation screen. So if you go to accounting and you go to reconciliation here, your reconciliation is done in the reconciliation screen, not in the general ledger. The general ledger allows you to see all the debits and credits, but it's not the double check. So when you're in the reconciliation screen, you're always putting in a beginning balance for a cash or a liability account, for an asset or a liability down here. And so the reconciliation screen compounds, right? It rolls forward. It's month after month after month, year after year after year. And so if your December bank reconciliation is complete and all these transactions, these debits and credits are correct, you have an ending bank balance. That ending bank balance in this screen should tie to your bank balance on your actual bank statement. And the reconciled bank balance should also tie to this outstanding bank balance. And if this column and this column do not tie at any point in time, what that means is you have a mistake in a previous month's reconciliation. And that would be the same on any cash asset account or any liability account. And from that point in time, you would go back through the months to say, okay, well, let me put in my 11/30/2023. Let me put in my beginning balance. Again, silly example here, but my 15,000 doesn't tie to my 1.3 million. Well, what's wrong? Again, that means that there's a mistake somewhere. You could continue trying to catch it. I would recommend doing this to at least understand where and when the mistake started. I would also just sort of caution you, if it's 20 cents, I personally wouldn't bother. Anything under $1, definitely immaterial. I wouldn't bother at all. Depending on how much volume in cash, meaning in cash transactions in and out of the bank you do, even if it's $2, again, it just depends on how much money is flowing through that bank account. Yes, you can absolutely undo a reconciliation. That's a really great question. So let's say I'm going to just go back to December. I did December, I put my beginning balance in, I put my ending balance in, and I can't get anything to tie. Like something is still off here. You could absolutely unselect. Oh, there's not that many here. So let's pretend we reconciled all of these, and these are all correct. And so something's still off. My ending balance isn't 178,792, it's 179,300. So that means there's a mistake here, and I can't find it by spot checking. Yes, you could select all and unreconcile, and that would actually clear the entire reconciliation. So what's tricky about reconciliations is if you're doing something mid-month, let's say you're just double checking something. So you go in on 12/15 and you say, okay, this cleared. I don't know, let's just say these two 12/14s cleared, and I reconcile them. And I forgot that I did that because I was just double checking something. Then I go in at the end of the month. If you notice, those two transactions, they're gone. They're not in this screen because they're no longer outstanding. So the reconciliation screen is only showing you outstanding items for, I would say, all of time. If you go back to a period that's reconciled, it'll show you the cleared and uncleared transaction for that period of time. But as soon as you go to the next date, the cleared transactions disappear. There's no longer a double check. You already double checked it, and you double checked it on a different day. So if that ever happens and you know that something got reconciled by mistake, revert back to that statement date up here and unreconcile the transactions that shouldn't have been reconciled. Go back to the last day of the month, and then still here they are, they're populating, because what we're telling the system is that they have not yet cleared. And that's because we haven't yet done our double check at the end of the month. So hopefully that helps. Reconciling I would say is absolutely critical. So in Studio allows you to reconcile month after month without closing the previous month. So no, if you reconciled November, but somebody went in because they have the permissions to see the screen and made changes, those changes would be live. That reconciliation doesn't necessarily get locked down. And so then for December, it's the same thing. But so manage your employee permissions, right? There should be very few people that are able to see this screen on a company level. So there would really be very small amount of changes being made. But reconcile all of your cash accounts and then all of your credit cards even as well. So we have a bunch in here. Remember, the biggest difference in your credit card reconciliations and in your cash is that the beginning balance on a credit card does start out as a credit. It is a liability on the balance sheet. And so this number would always be negative, and this number here would always end negative as long as you owed money to a credit card. So if, for example, your credit card ended with a $1,000 overpayment because Crate and Barrel refunded you and you paid the last balance in full, I don't know. That's not happening often, but you never know. The only time this would be a positive number is if your credit card statement ended with an actual negative amount, meaning a refund. But if your credit card statement is showing a positive number due to the credit card, this number would always be a negative. So that, I think, does get a little bit confusing in terms of reconciling the credit cards. And the credit cards aren't necessarily reconciled end of the month either, right? A lot of times they are sort of random dates, they're mid-month. You can call to change those, by the way. So I know American Express, for example, will always work with cardholders. If somebody wants it to be end of the month, they will change that. So we pulled our balance sheet. We're comparing the net profit or loss. Again, I just want to make sure that the reports are functioning properly. And so I'm looking to see, oh, okay, yes, this is my net income. Yes, it did roll over to my balance sheet. That's great. And then I scroll actually up back to the top, and I want to confirm that here are my cash accounts. I know this is reconciled. This is reconciled. This is reconciled. I forgot I didn't reconcile Chase. I forgot I had a savings account. I actually closed it, so I need to make this adjustment. I don't know why I have undeposited funds, and I don't know why Studio Pay is set up as its own bank account. So those would be things I need to look at. So if I go to savings account here, this was a transfer from 2021. Yes, I put it in there, but then I actually wound up closing that account back in 2022 and I never adjusted it. So this is a great point of the year to take a step back and double check again all the assets and the liabilities. You could absolutely make this adjustment. You could do it through a journal entry, accounting, journal entry here. I'm going to create a new entry. So I don't know what that was called. Chase savings, maybe? Maybe it wasn't a Chase. So savings, I'm reducing it by 500. I always like to keep a reference number in everything and anything that I do. I'm going to actually throw it back into last year to clear out savings. And I know I went to the bank and I took this out personally. I don't know what type of entity I am. So if you notice, here's my debit, here's my credit, my journal total is 0. If my journal total was not 0, I actually wouldn't be able to post it. It's going to give me an error to say the journal entry must equal 0. Remember, accounting is debit and credit, always, always, always. And so both sides need to equal, or the system actually doesn't know what to do with that dollar. At the moment, it is literally confused because there's a credit of 500, but there's not enough, debits to make it equal. So we're going to revert that back to 500. And remember, in your journal entry screen, this needs to be, this is where you set your date. So even though I in my reference number, I'm referencing my date, my journal entry date is still set in this main journal entry screen. So now I balance 500, 500, and I post my entry. And then if I rerun my balance sheet, my 500 goes away. So again, we have quite a bit of work to do. What is Studio Pay? Why do we have undeposited funds? For those of you who use undeposited funds, right, that is a setup under settings, under my company. Right here, do you want to use undeposited funds or do you not? Again, I would say usually personal preference. Everyone's a little bit different. They're not my favorite. It's not my go-to. I like the deposits to go straight into cash, so I would never check this box. But at some point in time, this box was checked, and then somebody forgot to move them from undeposited funds to the cash account. So that is becomes a research project of things we need to resolve. So next thing to review would be, I'm just going down the list, would be accounts receivable. So I would go back into my reports screen. I would go to all, and I would type in accounts receivable. I would do it either by invoice or by invoice by item. By client isn't giving me too much data. And I'm going to throw back my 2023 date. And so remember, test database. So there's quite a bit of open items and probably some test select a client. Select a client. That's a great client ID. 19th Street is my own personal test client that I always work on. So at the end of a year, though, I would, because we're accrual based, because all of this was recognized as income at one point in time, whether it be in 2023 or in previous years, I would absolutely go through this screen to make sure that these receivables are true receivables. And what does that mean? So will they be collected and are they collectible? It's absolutely fine if the answer to all of this is yes. So our number is quite large. It's right $912,000. That seems high to me. I would make sure that your subledgers tie, right? So that's something that I'm doing. Not only am I looking to see, and they don't actually, not only am I looking to see if they're collectible, but I'm also looking to see that if the dollar value on the accounts receivable subledger here equals the accounts receivable balance sheet. It doesn't. And so the next thing to do would try to be identify when that problem started. So what you could do is you could pull your balance sheet month over month and your subledger time period over time period. So if we go back to 2022, and so actually let's figure out this difference because a lot of times the difference carries over year over year. So my difference is 10,262.48. What's causing that? Well, I don't know. But in theory, before we solve any part of our taxes, before we file any part of our taxes, this should be solved. So you could do it a number of different ways. You could go into your general ledger screen. I would search by a positive this number, but if it's more than one item, it'll be hard. I would search by a negative this number. Does anything pop up? No, it does not. Super awesome. Then I would go to 2022. So let's pull this subledger as of 2022. So I'm still on accounts receivable by invoice by item. Then I would go to my balance sheet. I'm going to do the same thing. Look at 2022. So I'm at 315. Whoa, our fake receivables really went up. And so, oh yeah, no, but am I still off by the same amount? 315. I'm still off by 10,262.48. And so again, this is just one way for me to understand, well, oh my gosh, what calendar year did this occur in? And if you were doing this year over year, this is something that should have been caught before this. And therefore you hopefully would have identified it a lot sooner. I actually really think I just did this. Did I pull the right year? 2021. And I really, okay, hold on. Pull the balance sheet. I'm going to go to my accounts receivable by invoice. Because then, and so remember, you're going to have closed periods in Studio, so that'll make it hard too. But you could at least go to support to say, and potentially, right, support would be able to help you. I have, oh, that must be the, oh no, did the number change? Oh, 170, oh, 992, 180, 270, 240. Oh no, 10, 260, 248. I was just seeing if anything popped out in here. You would be able to say to them, right, you give them the most information possible. Well, my accounts receivable subledger is off. I've looked through all of these years. I was able to identify it. We could transition to inventory. We could actually look at inventory in terms of how it functions on the balance sheet. There's in terms of end of year and all of the reports, there's quite a bit. There's quite a bit to go through. So if you'd like to pose your question, I could see if we're able to pivot a bit. So again, you would go back through the subledger up here to see if you could identify the discrepancy. And at that point, you would need to decide, is this something that you want to keep from filing your return because you want to identify it? Remember, I'm sending my financials and I'm reporting to the government, especially if I'm not a Schedule C, right? Meaning especially if I'm a S corp and my balance sheet is reported on my tax return. If this 902 isn't collectible, I would absolutely go through the steps of voiding invoices to make sure I'm not overstating income, right? Why am I keeping invoices open with revenue that was recognized in a previous period if I know that's not going to be collected on? I don't want to overpay my taxes, right? I'd really rather get my AR report correct so that my tax liability is correct as well. That's a great inventory question. Let me just pause on that for let's try to maybe wrap up the balance sheet and then we can revisit it. That's definitely a great question and one that comes up, I would say, pretty often. Okay, so I'm hoping that the goal of understanding the receivable subledgers makes sense, and then in addition to that, really making sure that again we're not overstating and overpaying. Those two things are really critical. And if you notice, I mean, we're now in an old report, but on our 2023 receivable report, right, it had things in there from 2021. I'm not collecting things from 3 years ago, so what that means is in 2021, I overstated my revenue. And then what that means is I overstated my net income, and that means I overpaid my taxes. So I'd like to make those reversals. I'd like to void those out. And so whenever you void in Studio, it'll void the transaction on today's date. So that means you'll pick up the overstated revenue in today's period. So we're currently in February 2024, and that's when the reduction in revenue would occur. So that's the importance. What year are we? So this is 2021, so not the right year. This one? Let's see. Oh, this is the right year. So we're in 2023. We looked at accounts receivable. We can actually go to inventory, and so this is a pretty large number of inventory. It's 100 grand. It's not 500, but it's also not 10. So that means that there's quite a bit of inventory items in here. And hopefully that means that you did some sort of physical inventory, hopefully at the end of the year. That can be a very large undertaking. I understand. I mean, if you were a store, you'd be taking physical inventory all the time, but at least try to get yourself in the habit of doing it at the end of every single tax year for sure. And so one of the questions about inventory was, well, I have something in stock and I made myself the vendor and I would like to close the PO, but is that the right process? So the answer would be, well, it depends. So if you created the item, let's see what we have going on in inventory. You created the inventory ID, you threw that inventory ID onto a purchase order with inventory as the client. I don't know what a fin chair is. Maybe that's some fancy term that I just don't know. So here's an order. So, and this says the vendor's AA custom furniture, but pretend that it says me. And I'm in Robert Stone Consulting, but let's pretend that Robert Stone Consulting had this chair. And I don't know what a fin chair is. So we're just going to say dining chair, and we reupholstered it. And so I paid for it personally. I paid for it 3 years ago. It doesn't even matter. And so what you are deciding then, if this ever happens to you, and you covered the cost or you expensed the cost 12 years ago, are you looking for the company to pay you back the money, or would you just like this purchase order to say zero, that there isn't a cost associated with this item? So everyone's going to do it a little bit differently. If you really did just pay for the item personally a week ago and you want the $1,250, you can absolutely create this item and then this order paid to you personally and issue yourself a payment on that order, just like you would with West Elm or Pottery Barn. That's one option. At the same time, if you, and this happens actually when entities are I would say are starting out. So the principals are buying, especially in like a showroom scenario or a gallery scenario where principals are buying quite a bit of pieces. We're actually closing those or purchase orders out to their loan personally. So instead of going into this screen and going to payment and having it be an ACH transfer from Citizens Bank, I don't know what's in here. Hold on. We would have a personal loan set up. So this says owner's draw, and I actually wouldn't commingle it. I would very, very clearly set up a new account that's a loan payable. And so it would say loan, and then it would say inventory, because what that means is I really did front this money, and I really do want it back at some point in time. Let's say right now the business can't afford to pay me, and that's okay. But I'm going to set it up as a liability, current, and that reference number probably needs to be corrected. And that way, all I would need to do is so the purchase order is now showing paid. So this item is showing paid. But then if I pull my balance sheet as of today, include zero, still no. And somewhere loan inventory is now showing that we owe someone for an inventory purchase of $12.50. I did not put it into equity. I put it in as a loan payable. Because it's very clear to me that I want, in this particular situation, I want the money back. How you label it is I would say up to you. What do your chart of accounts look like? Do you have other loans? What's the naming? How are those named? I like my chart of accounts to be named in a very I would say, systematic and organized way. So if I have more than one type of loan, I want to make sure that loan is very clear to me. So again, this is just an example. So actually, let's go back to our, so inventory, right? So if you're doing a physical inventory, go to reports, go to all, pull inventory. There's a good amount of inventory reports in here. Inventory or inventory with balances, just to understand, again, what's making up that 100 grand. Is that $100,000 really still active inventory that can be sold? And if it's not, it's very similar to that accounts receivable example. So A, your subledger should match, and then B, I want to make sure that the $100,000 really is sellable. So if my 100 grand, you know that $50,000 worth of this is just garbage and it's outdated, or it got ruined in the storage unit because of water damage, this would be a great time to adjust the inventory cost, because when you're adjusting your inventory down, it recognizes the adjustment as a expense. So it reduces your taxable income. So again, if that is applicable, this is definitely something you should dive into. Vanessa, I don't understand your last question there. If you don't mind rephrasing it for me, that would be great. So we talked about AR, we talked about inventory. Vendor deposit is super fun, and you could pull that subledger as well. So if you go to here and you go to vendor deposit, here's vendor deposit. This subledger A should tie, and then B should be logical. Do we tie? We do not. Oh, wait, do we? 322? No, darn. Again, I would do the same thing just to try to identify where there's a discrepancy. I would go, so like this math is what? So it's never going to be one item, but you never know. 329,052, 6390. So in our general ledger, any chance that it's one item? No. How disappointing. So I'm trying to understand again what's causing this discrepancy. Something is off in terms of something with my item entry, or even potentially my general ledger entries. And so I would go back through. I would pull the balance sheet and that vendor subledger. Oops, this is not the vendor subledger. To try to identify for myself, or if you need to reach out to support to say, hey, this is as far as I got. I was able to find it, but now I don't know what to do. So that would be a starting point. Vendor deposit 2. So vendor deposits tracks payments on purchase orders for items that haven't been invoiced. So I like to scan this, especially at the end of the year. So for example, this means that we have $60,000 worth of vendor payments on Holly Hunt items. Intuitively, I should know if that makes sense to me, or if that sounds so wrong. So for example, I know that all of our Holly Hunt pieces were installed in November 2023. And so I know that this is wrong, and that means I need to correct it, right? I need to find what it is. So you could find what it is in a number of different ways. You could pull, for example, my all-time favorite report with some great filters. So the 2010, you could pull it by Holly Hunt, and you could say invoiced is blank. And so here's a list of all of these open, well, I say open, but all of these items. Oh, and we should say purchase order is not blank to see. Okay. So here right at the top, I could see that there's Holly Hunt pieces. They have payments on them. The client side isn't paid at all. One of them isn't even proposed. And so this 6620 is part of this 58,000. And so I would know then from that point in time, again, do they need to be invoiced? Why wasn't the client proposed? I'm sure there's a great explanation. So this is a report you could use to say to yourself, okay, this number seems right to me, or this number is not necessarily correct. The other thing to look at would be your WIP report. We look at WIP, I would say, actually not as often. I like to pull project reports and instead of WIP. By vendor, sure. So I don't know what. Where did my report filter go? Maybe it's not there. Vendor ID is Holly Hunt. And so WIP is similar. So WIP is just showing you any order that it doesn't matter if it has a payment on the vendor side. It's just showing you any order. So any item on a purchase order that hasn't been invoiced yet at all. So this would be another great. Oh, and so here's our 59,992. I think that was the number. 58,992. So from here, you would determine, okay, are my vendor deposits real? Should I have invoiced more? Oh, I totally forgot we installed, project blah, blah, blah. And so this number really does need to go down. Just a quick question about inventory. So if you generate a purchase order and it is not paid, will it debit inventory and credit accounts payable? So remember, inventory doesn't go up until you receive it. And so you can create a purchase order in Studio for inventory, but that doesn't mean that the inventory pieces are in. So think of it if you're a showroom and you ordered 250 candles, but your candles haven't been received yet. So if you go to projects, then you go to inventory, our inventory automatically filters by available greater than 0. I'm pretty sure that's a default in Studio. I don't think you could override that. But there's a difference between seeing all inventory IDs and versus something that's available. So inventory asset doesn't go up until you receive the inventory into the inventory module to be able to be sold. So here's our income statement. I don't know if we have let's see if we wrote any inventory off. Oh, we did. So in this particular example, we already wrote off $11,000 worth of inventory. So that means our inventory went down by 11 grand and we picked up the expense here of 11,190. So if that's a real number, that's amazing, right? I mean, well, from a tax standpoint, maybe we should put it that way. From a tax standpoint, that's amazing. Why were the goods not able to be sold? Again, that probably isn't so amazing. But that's where this inventory adjustment would show up. So if we keep going through even our assets up here, right, we have something super strange called a Baker credit. I've looked into this before because it makes me laugh. And so we have a credit with Baker. Why it's on our balance sheet, I don't know. It shouldn't be, but here we are. And so we really need to remember that we have this credit with Baker. We need to use it in terms of ordering, and then it would come off of our balance sheet. And hopefully offset a future cash transaction. So then we have something called suspense. So suspense for me is definitely a favorite. I love it, though I just was back and forth with somebody today about why you use it. So you have to use it very carefully. And so what does it mean? I should actually probably Google the official accounting definition. I use it as a I would call it like a slush fund, but it's a holding place. So it's something for a debit and a credit. Suspense should always be 0. And it really is, I use it personally when I don't want to impact a cash account. I don't need a debit and a credit in a cash account if I'm moving money around for something, or if I'm moving a retainer from one client to another, or from one project to another. I don't want the unnecessary debits and credits in my cash account, so I'll throw them into suspense. But interestingly enough, suspense, like anything on our asset side, can be reconciled. So suspense should be 0. So here suspense is $38,000. I certainly hope that this wouldn't be sent for tax purposes until suspense was 0, until we figured out what was in there. So I went into my reconciliation screen. I typed in suspense. Yes, you could adjust inventory under adjust inventory. Remember, when you're adjusting inventory, you have to adjust both so let's just go to one very quickly, projects inventory. Looks like this one. So here's on hand. This is a bad example because we oversold them and you're not supposed to be able to do that. Let's go to this test. Quantity 100. That's a little aggressive. So we have 129 available and we have a merchandise cost of $32.75. So if we knew that all 129 of these were no longer available because they were in a big giant box and they broke, we would not only adjust the cost, we would also adjust the quantity. Because not do we want the inventory dollar value correct on the balance sheet, but we want our inventory report and the module itself, right, to be functioning correctly. So I would go into adjust. And remember, there's no date on here. So this would be adjusted either positive or negative, but this would be adjusted with today's system date. So if you were looking to make an adjustment back into 2023, make sure that you are changing your system date. So let's actually post this and then we can see what it looks like in the GL, because I think it would be a good example. So here there's no other cost. I'm going to put it into today. Boo, I didn't want to do that, but that's okay. And so this 126.96 should be hopefully associated with the 10 that was sold, so that's okay. And so if you go to your general ledger screen very quickly and you go to inventory adjustment, in theory, there should be an adjustment here, but where did it go? Oh, maybe because it doesn't like my filters. Hold on. I had two GLs open at the same time. Okay, it still didn't like that. Tell me why. Where did they, oh, now they went away too. So my available is all, and it was this right here. So you could see my adjustment in, you should be able to see it in history, though I'm struggling with my dates. Oh, maybe I have a system date on. Oh no, 2/21/2024. There it is. Description inventory adjustment. To me, something's up in here and I can't quickly identify it. So the adjustment is here. It looks like I've tried to adjust this item before. I'm just looking to make sure that my date is correct. It is. It's 2/21/2024. I adjusted my quantity. I adjusted my purchase cost. That typically flows through to my income statement. But I can't see it in my ledger. Let me try to do a little bit of digging. So it's here. But why it's not populating in my general ledger? Sometimes I feel like the general ledger can be a little bit quirky in terms of the filters don't always catch up. So it's funny that it didn't pull this negative 32.75 associated with inventory. But regardless, so for some reason, the negative 32.75 should have populated to the inventory on the balance sheet, which it did, but it didn't find it in the GL search. But so here's my adjustment, right? So, and actually this is a great adjustment because there's not too much happening on my, right, in my cost. So we said, right, that there was damages. We unfortunately, we lost all that money. And so here's my inventory adjustment. And here's the, I mean, again, from a tax standpoint, here's the benefit of that. And then you can see the GL side, right? So it's reducing the inventory on the balance sheet and then increasing the inventory adjustment debit on the income statement. But that's definitely that's a great question. So suspense, we only looked at that briefly. I would go into my GL screen here and into my reconciliation screen to try to get something's up with my filters, like it's not liking them. Nope. Sometimes too, I try to close and I restart. I mean, not restart the system. That is, but I try to close the tab and restart. No, still nothing in suspense. And that's not, I mean, there's a ton of activity in here. So it's just getting hung up somewhere. So if you go to accounting and you go to reconciliation, here's all of my transactions in suspense. I like to look at them though both ways. I like my general ledger tab, especially if it's functioning. I always have it open. I like to look at all the pluses and minuses in there, but it's also, it's like remembering the old filters. All right. So here's suspense. So if you notice right away, right, we have a couple of adjustments in terms of debits and credits. And so these net zero. And so our goal before we send these off to a tax preparer would be to understand where our transactions are located that don't net zero. So I see a couple, right? 10, 10, and we're not going to get to the bottom of that. It's a pretty big number. But add this definitely into your workflow, whether it be monthly, quarterly, definitely annually, but take a peek at suspense just to make sure that everything is where it needs to be. So that's suspense. That's our lovely 40 grand right there. I'm sure it's, something that was a lot of times too, when you're making an adjustment, like it looks like here's one. Where's the other side of this? So did somebody forget? What happened? I mean, I could keep going. There's a $50,000 JE to tie into tax return. I mean, great, but what, I have half of it. We were trying to do something with undeposited funds. As we know, on this particular balance sheet, our undeposited funds are a mess. But yeah, obviously that you get the point. So we've talked a lot about the asset side. So you'd be doing the same thing on the liability side, because I know we're pretty much up against the hour. So your sales tax is your sales tax. As you can see, we have some HST adjustments in here, and they are not a credit, they're a debit here. So that's something is off on that. The other things too, I think, keep in mind would be client deposit, which is a really big thing to look at in terms of year end. And so you could pull the history or the detail of that by going into legacy and going to the client deposit report. This one is my personal favorite. Again, zeros, no thank you. And so I really want to understand if my money and funds available is correct. This is saying about 3 million. And then if the dollars associated with items on proposals are accurate. And some of this is just intuition, right? Especially if you're the one who's in here and posting all the time. Again, this goes back to that Holly Hunt example. Well, I know I don't have $60,000 worth of Holly Hunt vendor deposits. I know that because all of those goods have been installed. So why do I have this particular job installed 2 years ago? Why is there $100,000 still in client deposit? Something is off. And from there, you would go into more detailed project reports. So client deposits are a big one. I would recommend looking at those pretty regularly for sure. Accounts payable, so right, similar to what we did for receivables, go in and make sure that your subledgers are correct, and then really make sure that the dollars owed in those purchase orders are correct as well. So it works the same, but in reverse. If you know that you're never paying Crate and Barrel for something, then you should either void the purchase order or adjust the purchase order down. So this accounts payable shows 189. So let's look at it, because and again, we're in a test database, but if that's from 3 years ago, then we don't have that accounts payable, and we should adjust it down for our taxes. So 12/31/2023. Oh, Stacy, that's actually a good question. So let's make sure we answer that before we wrap up. Money in is pretty permanent, and so I just want to make sure that we go through the three buckets of money. So, right, if you notice, I pulled my AP just really quickly, and I have so much old stuff in here, and it doesn't even really matter necessarily why. Human error doesn't matter. But if I know that I don't owe Martins this $29.90 for this bed, I certainly don't want it on my AP report. So my AP report number is wrong. So if I'm doing some really high level cash calculations, I'm going to look at this and be like, well, shoot, I don't know vendors 200 grand. So you could go in, you could void this order if none of it is owed, or you could go in and adjust the order itself to make sure that the dollar value reflected on this report is actually owed. In doing that, again, tax purposes, but also just internal management. Make sure all your credit cards are reconciled. Sales tax is sales tax, prepaid sales tax is tied in part to sales tax, depending on how it was posted, and then anything having to do with our loans as well. So citizens and SBA. I've been telling everyone, right, the SBA loan is accruing interest, so make sure that you are posting that into Studio directly. So one more question before we wrap up. So it's money in. I really like money in, I really do. I wish they would rename it personally, but so here we are in money in, and if you notice, there's a payment option up here. And so money in is permanent. You cannot delete it and you cannot void it. The only thing you could do is you can reverse it. The first three up here, these first three money in options are related to clients. And so I actually usually tell our firms that the receive miscellaneous payment you shouldn't really be using. So unless you're doing a refund from Verizon, which we could also be posted as a journal entry, you wouldn't necessarily be using it all that often. But the top three are the ones, the payments, the cash receipts associated with clients. So if you're taking in a regular payment, excuse me, from 19th Street, they're going to pay this balance on this French chair of $431.90. And I actually took check number blah, blah, blah to the bank and I deposited into Bank of America. The Studio automatically assigns receive and apply to all money in transactions. That's the most common. And what that means is you're actually depositing money into this bucket here, and you're actually attributing it to an item down here. So if you notice, the items are shown below, and then your cash account is shown above. And so the amount received equals the amount to apply. I'm going to hit post payment. That item goes away because we're filtering by our item balance, and our Bank of America went up. You could double check that. Well, if our general ledger screen decided to. No, you'd be able to see the positive number on the Bank of America GL side. So you know that happened correctly. The next payment method would be, well, let's say we're taking a big client retainer, and as you can see, Mr. Tom Hanks has quite a bit of money on account, but I know I'm going to be starting his Europe project, and I actually want him to send me more money. So here's my received client payment option. And so this is, if you notice, as soon as I clicked it, my items go away. My items go away, but my cash account still stays, I don't know, alive, real, not gray. Right? Items are there, items go away. And so the system is prompting you to say, okay, well, he's going to give us an additional $1,500. It's actually quite a small amount. As a small wire payment to add to his funds available. Actually, I'm going to get a little technical. I gave him a budget of $890,000. And so I want him to cover the difference. That's $33,2781. So notice when you're in this payment method, this is the bucket that goes up. And also notice, right, it's actually just saying to me, I'm only receiving money. I'm not applying. So right, the items are gone. No money down there. Just money up here received. And this number is the one that's going to go up. I'm still putting it into Bank of America. And here is my $890. And so the next one that's sort of related is apply payments to items from funds available. So this is actually taking money off of items or putting money onto items in and out of this funds available bucket. So I sent him my budget. He gave me a small wire, right, of the $3,000, the $3,300. I now have $890,000 to spend. And I started sending him proposals. So I sent him proposal 10517. He approved it. And so he gave us the go ahead to apply money from funds available to this proposal. So if you notice, when I'm in payment method number 1, my cash account is gray. I can't do anything. It's not allowing me to click it because I'm not using my cash account. I'm using this bucket, funds available. So I'm actually going to apply deposit to all, though I clearly didn't do a good job with my test item for Florida. because my deposit balance is 0. I actually don't want to do deposit. I want to do all balance because I didn't utilize my deposit percentages correctly. And so I'm applying 43,120. If you notice again, right, amount received, that's now saying 0 because I'm not receiving anything. I'm only applying. So applying is related to funds available. So at the moment, I'm taking money out of funds available. Use some sort of initials. So you could do funds available, FA, and today's date. And that actually dropped down to 846. But you could do a similar, you could also move any overpayments from items back into this bucket as well. So I don't know if I have any, which is, oh, I do. Test nightstand credit, and it's not on a proposal. Let's throw it on a proposal because that's a pet peeve of mine. 19th Street, test nightstand. Oops, okay, it's on a proposal. I don't like ever applying money not on a proposal. I'm going to go to save and close. So they had a credit, I don't know why, damaged, blah, 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 don't know. But I'm going to take the negative 3,600 and I'm actually going to throw it back into funds available. And so this number up here needs to match. So this number here and this number here are these totals. So if you notice, match, match. Oh, actually, I'm lying. They don't need to match when you're in the right payment method because all I'm doing is applying it from here and moving it up to here. So watch that number again. And now that went back up to 850, 490. So that's, and those are, I would say, too, the three most common. Again, the last one should never be used for client related funds. So with that, I think we're pretty much against the hour.
Yeah, that was perfect timing. You wrapped that up right on the money. For those of you that are still with us, if you'd like to get in contact with Julia for one-on-one support, her email is julia@newagefinancialconsulting.com. You can find her phone number and her web address right there as well. And if you need to contact studio support for anything regarding studio, including accounting and things like that, send an email to support@studiodesigner.com, or you can click the chat bubble and speak with one of our agents. And with that being said, thanks for joining us once again and taking time out of your busy schedules. Greatly appreciate it. We hope you have a good rest of your day. Take care.
Thank you.
Bye, Julia.
Bye. Talk to you soon.